Hey, Dave Down here from 123daytrade.com. Thanks for watching. Thanks for being here. Last video that I put together showed my downfall of how if you go on tilt, what can happen. And this what happened. I was up 1,300 bucks on this trading account. I was my high watermark was 31,300. It's 31,300, and you see where I finished. Now, is this a failure? Certainly, because I failed a rule. But notice that this particular step two, if this would have been a failure at another level, you would be pulling out positive money in this. So having a loss limit is a good thing. Um, so like if this would have been a futures account at TopStep Trader that was funded, you'd actually pull away $439.10. They'd actually write you a check for that. Now, I've had days like this where I fell apart and then they had to write me a check that way. So I know that from past experience. So it's, but allowing yourself to go on tilt is not a great way to approach trading. What I want to show today was the trade setup. Now, let me preface this to say that where I'm struggling right now in my overall trading is what volume means to me. When I was getting set up today to trade, when I came in, the trade setup, I believe it was this bar right here, 2382. This showed 26. Okay, is this one right here? At 11 a.m., this shows up 2620. Now, where I struggle at times is how to interpret the data that's put in front of me. I know that this is a significant event when you see these high volume spikes. You just don't know which way the market's going to go. Now, I do know this. I know that if the market fails at a level, meaning right here at the R1 level, that you should be shorting below and going long above. That's kind of the understanding that I've come to a conclusion with. Now, I found a long here that I started recording. I think it might have been the second trade, and then you see it just kind of bottoms out. So knowing what I know about this, it's fairly simple to look in hindsight where you should be shorting the market, right? I mean, the failure of this bar right here is underneath this level and it goes down to pivot, and then it rebounds off a pivot. So in hindsight, you can always find that if you just had enough. Anyway, so today should have been a very easy day trading day for me if I would have been available at the 8 a.m. open. And even though I wasn't available at the 8 a.m. open, it still could have been an easy trading day if I would have followed the volume numbers the way that I know volume can operate. I understand that this red can go both ways. Now, I've struggled with this for years that I've used volume as an indicator. Is what does red volume mean? What does blue volume mean? What is it? Is it a buying signal? Is it a selling signal? Is it a mix? There's no rhyme or reason to what it is. You don't know what is on the mind of the individual trader or traders that get this move. It could be stop running or it could be buying coming into the market. You just don't know. You don't know if it's a real, you just don't know. I mean, you have to have confirmation, especially on longs, to trade along. Longs are the hardest thing to trade as a crude oil trader. You think they're easy, they look easy. I mean, it's like, well, look, if I was just long here, I'd be great. So this volume spike and these combined right through here turn the market over, and it goes down to pivot and it comes up. But why did the market turn over here, but it didn't turn over here? Well, it had more down it wanted to go to at this point at R1. Why? Well, I don't know. I'm not that smart enough to figure it out. What I'm telling you is this has been my nemesis. Why I added on MACD pretty much right now is that I need to be positive, especially as I'm learning how to trade. Longs are such a pain in the ass. Longs aren't so hard in some of the other markets, but the crude oil market, by the time it turns around, it'll move 10, 20, 30, 40, 50 ticks against you and then move up. Well, you've already failed step one of the 30K combine. By the time it rolls down so many points and then or ticks and then comes up, it doesn't make any difference. You still lose. So if you look at this combination of volume today, you say, all right, well, that volume, here's where I was trying to trade, and here's where the bottom comes in. Is there anything significant about what you see here? Low to low, low to low. Well, yeah. Well, yeah. What about over here? Low to low. Here stays low. Here it's coming up a little bit. So it's looking okay, and then it fails. So the line in the sand is right around this area. You can be taking it short. Now, all this is not the easy trade of the day. None of this. None of this that I'm showing right now was the easy trade of the day. The easy trade of the day was a lot earlier. It was up here, up against the high. If you would have been, or if you are or were available to trade the easy trade, the extremely, extremely easy setup to take today was up here. And why? It's fairly simple when you look at it. Is that sloping up or down? Is MACD sloping up or down against this point, and this point? And you have a volume above 1K. Now, what I can tell you about volume is blue volume is more applicable to find a top than red volume will find a bottom. So red volume trying to find a bottom is very, very hard to do. But blue volume trying to find a top can be a very easy, or let's rephrase that, an easier thing to do. So I added one extra component in here, and it's called MACD. Because what I ended up seeing here on the Williams %R is this is hitting zero, this is hitting zero, that's hitting zero, this doesn't. So right here is where you see the divergence signal. And the trade itself, very easy, was to short roughly at the 50 bar line coming across prices. Now notice this is angling up, but you're looking for a top. You have a signal. Here's your signal bar back here. And it tops out 1, 2, 3, 3 times before it finally starts coming down. Here was the easy trade setup. Minimally speaking, this was worth trading 2 and catching this move. 94 on 1 and 157 minimally speaking on the second. So 11, 11 carry 1, 5, 14, 15 carry 1. So it was worth 2 contracts, one at 3p and the other off at coming off of 5p. Minimally speaking, this was worth roughly $2,510 on 2 contracts. These are the kind of moves that I pride myself in catching, that I know what I'm looking for and I want. So I added one extra thing on to help me catch these kind of moves. Now, what I'm learning as I'm moving forward is that the bottoms can be kind of picked off a little bit later on when you see a similar situation coming a different way. So you see the signals coming in here plus the one over there. You see this coming across. You see this coming across. And it just starts making all kinds of sense what's going on. So this ends up being the low. And you see kind of a head and shoulders here. And it makes a bottom. And what is still an up move. The retracement part of this trade was the short. The buy the dip part of it, or the trend side of this trade, is the long side. I knew this, and I know it going into the trading day, and I knew that I wanted to be long on this day. Got a little too carried away on the last video that I put up. I actually had a pretty good spot up here where I was trading up there, but when it failed, I should have had a reversal to the short side on that failure line. Just like here, you think, well, is it? Well, it's all by itself. One bar is all by itself. 1K bars will normally come in at least twos. So there had a 1K bar back there, and you had a 1K bar, and you had a 1K bar here. There's your second. Here's your third, fourth, fifth 1K volume bars. There's something significant going on in the market at this point in time. There's something not so significant going on in the market right here. Where I've struggled in my day trading is trying, I see this. See, I see that there's a time to be involved in the market. The market will basically say, hey, it raises its hand and says, hey, look at me, something's going on. The volume is coming across the market. Or there's a lack of volume and a lack of interest at other levels. For instance, you see here at 8 o'clock, you see this coming across, and it's signifying a buy side, but it's all under 1,000. None of these volume bars are greater than 1,000. It's not really showing anything. So it tops out up here. So you had an opportunity maybe to catch somewhere between 20 to 30 to 40 ticks on the move up. But the significant point, knowing that $40.44 was the high, is to see how it would affect 40.44, and when it went above that, how would it affect it? It barely goes up to $40.60 and it sells off. There's a lot of pressure. There's supply up there is what it ends up being. If I would have been available to trade this morning, I am very confident that I would have had a day that I would have pulled out and won this day. Now that affected my breathing going into trading later in the day, and why I failed step 2 is because I understood that I would have passed step 2 if I would have been available to take on this trade right here, right here. I knew that if I had the opportunity to catch this one up here and I was available to trade, I would have moved on past step 2 on this day, Friday, Friday, June 19th, 2020, and it affected my breathing when I started trading later in the session because I missed the easy trade. So how do you get around, at least how I think about an easy trade and how to get around it is not put yourself in the predicament that I would put myself into. If you're not available, know that you've missed that trading. So if I can't make the open, not a lot of great things happen if I come in a little bit later in the day to try. I've done this in the past. I've tried to catch these days that I miss in the morning because of things that's going on in my life that I'm not available. But I would have been available between 1 to 1:30. Now, knowing that I would have been available between 1 to 1:30, was there an opportunity to maybe catch 1.5p for 47 ticks today? So that means that I need to look between 1 to 1:30. So here comes a move right here at 106. So I would have caught this move coming down underneath this gold line right there. So the move was from 39.79 I missed the big money today. But if I would have taken the last half hour trading on 39.79 and I needed the market to come down, and you measure it from the high bar right here. So you want to measure 1.5p. In this case, the high was 3992. So that's what I've got to put in. I got to put in 3992, and what I'm looking for right now, just so you understand what I'm looking for, I'm going to pull my chart over here. 3992, I'm looking for a break-even trade, what I call the break-even decision, or the CL30, 39.45. That's where I think on a 1.5p move the market could run down to. Did it go to 39.45 between there and 1:30? No, it did not. Did the market run 1p down from 3992 to 39.61? Yes, it did. Where would my exit have been? 39.61 to 39.63, somewhere in here would have been my exit on this trade. I will not take a lot of risk on this trade. But you can see the market comes down. It runs 1p. It does not run 1.5p, by the way. That had been 39.45. So 79 to roughly 61 is about 18 ticks. I could have turned this day, if I only take one trade on today, and I trade my close 30, I would have not caught the movement that would have passed my step 2, but I would have caught an 18 tick move to 20 tick move that would have moved me closer to finishing step 2. All right. You know I like to explain myself. You know that I'll have bad trading days. There's not much that I can say to this day that I haven't already said. There was a great opportunity today to pass step 2 and move into the pro-funded account. Obviously, I'm not ready to move on to pro-funded yet because I have to figure out, well, one of the things that I've thought about over and over and over again is how many trades is too many. Today, 11 trades is too many, but another day I had 23 trades and that wasn't too many. I've said in the past that anywhere when I get over 5 trades in any given day, it's too many. When I get 3 to 5 trades in any given day, it's too many. I've said this all in the past, and go back and look at my content. You'll find that where I struggle is trying to figure out exactly how I want to attack TopStep Trader in the third. And I've said this in the Facebook Live. Go over to Facebook and you can see my explanation behind why it's so difficult to be a day trader inside this environment, where on one side I'm used to handling per contract $1,000 loss. I can't do that here. And the 50K, so you have to push up to the 100 and 150K. Well, I don't want to go after $9,000 in fake money in a simulated account. I just don't want to do it. If I want to go after that, I'd open up my own futures account and trade a day trading that way. The only account that makes sense at TopStep Trader in my trading position is the 30K account. Humbly speaking, if I could make the 30K account work with 2 contracts, that would mean that most likely I only have one trade that I can lose on at maximum loss when the ADR is low enough to be able to take on 2 contracts. Today, the ADR was low enough to take on 2 contracts if I would have been patient enough and I would have caught the move to wait for it to show a signal. Now, what does a signal mean to me? Well, I don't believe a signal to me is anything under a 1,000 volume spike bar. That is where the good trades start to set up, is when you have a volume spike bar that's greater than 1,000. They don't come very often, but they'll also limit your risk. If I wait for a real good trade setup, and everybody that's a trader understands this point, if you can be patient, you can win your trading day if you would wait for the odds to come on your side. The problem is that we run into as day trader is we might look at it, or as I look at it, kind of like a video game where you start pushing the button, pushing the button, pushing the button. And you can look at the last video that I put out, how quickly you can go from having a day that could be a winner to, oh my God, I just blew step 2. Back to the drawing board you go. So I've been down this road a lot of times. A lot of times. I've had success and failure inside this environment over and over and over again. I have days like this particular step 2, I had $1,000 winning day. That was some good things that I had. I could have got a lot more on that trade if I would have held it for longer. That I could have won step 2 in the very first trading day, because the market went down like almost $2.50 that day from the entry point that I got in. So that could have been the winning day. It could have been the winning day today if I would have been available to trade when the market was ready to be traded. I chose the hard part to trade. I chose the time that the market decided to go, started really getting busy, started really getting hectic, and the easy money even then was to be short on that failure of that volume bar. What I understand is blue and red volume. Both of them can be buying signals. Both of them can be selling signals. Both of them can be failure signals, and both can be confirmation signals. That is where I've struggled in my trading, trying to formulate a good trading strategy to go about this market. What I decided, and when I tried to use Williams percent R, a lot of times it hit the bounded side of it at 0 or the bounded side on Williams percent R at 100. It didn't give a valid trading setup for me to think, is this a top? Is this a bottom? But with MACD added back into here, all of a sudden it's starting to show signals that if I just wait for them, if I can stand and wait, if I can just be patient enough and wait for them, if I can limit my trading opportunities, it could be a possible place to be able to put on that second contract to actually make this work for me. So if the first 2 contracts come off in a real positive manner, I might be able to put on a second set and accumulate even bigger winning day later on, or who knows. There's a lot more that I want to work on, But I like what do I like about this environment? Even though I get the bullshit that comes from even though I get the bullshit that comes from other people in trading, is that I understand that this is a safe environment, to be in right now for me personally, to know where I can limit my cost. I'm not blowing thousands of dollars, but I'm developing my trading strategy of how I'm going to approach and win in the markets over and over again. And I keep building upon my successes and my failures. And you'll see that over the last 5 years of my trading, that I've been able to build from my successes and my failures, regardless of whatever Adam and his various alts keep telling you inside here. He's an asshole. He loves misery. All right. This is Dave Knight here from 123daytrade.com. He goes by many names. He's Lucifer. He's Dunks McGee. He's many different people here. He's my legion. All right. Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. Have a great weekend. Have an awesome Father's Day weekend as well for those that are dads out there. And I will, maybe I'll do something special for this Father's Day if I can get my kids to mimic what we did years ago. All right. Bye for now. God bless you. See you on the next video I put together. Bye for now.